Hello and welcome to our series of short recordings addressing the people, process, and technology necessary to implement sustainability reporting. I am Hsiao Mei, Head of Corporate Reporting Insights Sustainability at ACCA, and I have with me Sharon Machado, ACCA's Head of Sustainable Business. In today's session, we will focus on reporting and continual improvement, which are covered in stages 6 and 8 of our sustainability reporting cycle. Here at ACCA, we strongly believe that professional accountants have a broad sustainability role, and that connected corporate reporting is an enabler. However, taking that first step is often the biggest challenge. But sustainability reporting is not a race to a set finish line. Rather, it's a journey of continual improvement. So our key message for you today is simply get started. It's okay to start small. Just get started on connected corporate reporting and then find ways to improve. Now, in our other videos in this series, we have explored the reporting process, the responsibilities of those involved, and how to identify sustainability-related risks and opportunities and material information to be disclosed. Today, let's take a look at the reporting itself. How will your disclosures tell your organization's story about its sustainability reporting journey? First, think about how your organization plans to communicate its story. Reporting frameworks generally do not specify a location to report sustainability-related information. An example of this is the IFRS Sustainability Disclosure Standards, which suggests that such information could be included in an organization's management commentary or similar report when it forms part of the general purpose financial reports. Popular trusted choices include the annual report, the sustainability report, and integrated report. Other examples you might be familiar with include the management discussion and analysis, operating and financial review, and strategic report. Disclosures may also be included by cross-reference to another report that the organization publishes. So which is the most suitable mode of communication for your organization? A good way to figure this out is by thinking through questions like, what types of sustainability-related information will be reported? Who is your organization trying to reach? Who's your audience? And are there regulatory or other requirements that your organization needs to comply with? Next, think about what makes reporting good. So we often hear about the qualitative characteristics of good reporting. For information to be useful, it must be relevant and faithfully represent what it purports to represent by providing a complete, neutral, and accurate depiction of an organization's sustainability-related risks and opportunities. This usefulness is enhanced when the information is comparable, verifiable, timely, and understandable. But what really makes a difference is how various types of information are brought together while keeping ethics at the front of mind. This can include information relating to sustainability-related risks and opportunities that can reasonably be expected to affect an organization's prospects, disclosures in an organization's general purpose financial reports, and information provided within and across an organization's different means of communication, whether for internal or external use. So Sharon, I'd like to turn to you for a moment. Could you please share with us some of your expectations on connectivity between various types of information?
Yeah, sure, May. I think one of the things that, and I think you did touch upon this right at the start, and it was around that audience. That audience are invariably people, organizations, and they need to be making informed decisions. And that's my number one point, I'd say. And therefore, in terms of those informed decisions, hopefully in those decisions driving what we would say is better business. And better business that is sustainable. So sustainable across a number of things, be it finance, together with environmental, social factors as well, and recognizing the really important role that innovation is likely to play. And of course, sometimes there are going to be conflicts between those four areas of environment, finance, society, innovation over, let's say, the shorter to longer terms. And that for me is where connectivity plays a really, really important role, because it will help surface some of these conflicts that may exist, and that will then help that better decision making. Now, what connectivity may mean for users and preparers, I think it's just worth reflecting on some of the work that we have done over the last few years. So, namely the climate readiness piece that we had and intangibles projects. And the key thing around connectivity and user decision useful information is it has to be easy to engage with. So less scattered than perhaps is currently, well, is definitely currently the case from some of the research that we've observed and undertaken. Reduce duplication, reduce gaps in the information. So leaving less of that, oh, what's missing? I need something else in order to move to the next stage of my decision making. And given that in many instances, people want to understand the finance as well, it has to be connected with the financials, be it in the financial statements for purposes of business planning and access to finance and servicing that. And of course, I think, as you mentioned, applying ethics in the preparation and the use of that connected information. And fundamentally, then, what types of decisions are needing to happen and what do these people need to understand? It's business activity and that flow between strategy, governance, sustainability related risks and opportunities, what they are, and really importantly, how they are being managed. And then in turn, that will then link back to how that strategy is progressing. So in a nutshell, or in summary, I think the key things that I would say, connectivity for me will mean linking to the financial statements, financial planning and business activities, and really provide a sense of the impact of leadership. And something rather controversial that was shared with me in a recent roundtable that we ran for a future piece of research was that impact on materiality. Some people are starting to think about it as triple materiality. Perhaps not a conversation for now, but something that we can talk about in a future piece of our work. Hope that answers your question.
Yes, thank you very much, Sharon. So, reflecting a bit on what you've shared, I'd like to emphasize again that organizations really need to clearly and concisely explain the connections while also avoiding unnecessary duplication where disclosures involve common themes of information. So, for example, if an organization manages its sustainability related risks and opportunities on an integrated basis, the organization could provide integrated risk management disclosures rather than separate disclosures for each sustainability related risk or opportunity. Sharon, while we are still on the topic of connected information, would you also be able to share some examples on how connections can be drawn and reflected in an organization's disclosures?
Yeah, sure. Okay. So I think it links back to achieving the expectations that you asked me about right at the start. And I think in terms of that, how do we go about it? Preparers should really be working with others in the business and outside to identify their needs in decision making. What does connectivity mean to them? And in our work, there are some common things in terms of what connectivity might mean. Certainly, as I mentioned before, sustainability with financial information and recognizing that that could look quite different. So it could be quantitative information or indeed much more of a narrative story that indicates a direction of travel. Now, we recognize that this is a journey, so therefore it is okay to start off with that narrative story, recognizing that journey, even in its narrative story, it has to be complete and robust in how you tell that story and develop over time. And of course, what connectivity might mean and how it's done will depend on how accurate it needs to be today versus the way it can develop over time and how immediately the user needs it. Now, explaining the strategy and action point that I made earlier on, and perhaps reflecting a little bit on what might create impactful leadership. I think for me, the types of things that they need to be thinking about are, well, recognizing the connections that sustainability strategy and activity might have in accessing and servicing of finance. As I mentioned, thinking about very particular numbers potentially in the financial statements, be it asset valuations or impairment triggers, and then obviously impairment activities. Looking to the future and clearly saying, look, in our strategy, we want to reach this particular place and talking about that progress towards it in the form of targets using metrics. And of course, that's in the financials, but also seeing how those targets and metrics play in how the organisation measures itself internally, potentially for some key employees, and perhaps linking it to their objectives and even remuneration. And of course, how sustainability matters are being connected to supplier engagements and how they are being managed. And on suppliers, I might just extend that a little bit to be thinking about how sustainability action affects them. So potentially in changes to service level agreements, or indeed featuring much more as we're seeing in procurement arrangements. The request for suppliers to identify and talk about how they are managing their risks and opportunities. And that for me is a really big call to action to all suppliers, including those that are small and medium-sized enterprises, because they're not immune. And there's a really there's a comment that I hear that makes me a little bit nervous. We're hearing a couple of instances, not many to be fair, where we're hearing SMEs say sustainability is not for them. But I think a lot of our research that we have done, and indeed many of our colleagues within policy and insights at ACCA, have said, well, no, it does apply to you when you think about the fact that 90% of all of the businesses globally comprise these SMEs. And so therefore, there are a huge number of benefits that are available to them. And indeed, actually, if the supply chain is not providing this information or acting in a sustainable way, then it is likely to have negative implications for them. And perhaps if I've got a little bit of time, I might just end with a short example of what a connected disclosure and its implications might look like. So imagine that you've got supplier B. And supplier B doesn't meet the sustainability service level agreements of company A, so the company that's doing the reporting. Or the supplier B doesn't really follow where the industry it's in is headed when it comes to a sustainability topic. So therefore, company A might well say, look, it's not worth me buying from you anymore, or offering worse terms of trade. So therefore, company A will be maintaining its financial records, an annual report, maybe its management commentary amongst some of the other documents that you referred to right at the start. So it's telling people about that story in terms of not just what it does in terms of its business, but how it manages its value chain. So therefore, the suppliers. And therefore, the connected information that was presented by company A will help its stakeholders, but in turn, potentially have further implications for supplier B. Over to you, May.
Okay. Thank you, Sharon. That was very helpful and certainly a lot of insights. I'll circle back to your point on metrics and targets in a little bit, but for now, I'm going to talk about how we can enhance the integrity of reported information through a cycle of verification and continual improvement. So it's important that the level of rigor applied to reporting sustainability-related information is the same as that applied to financial statements in order to produce verifiable and assurable disclosures. Verification supports building trust in sustainability-related information and underpins its assurability. So to address the quality of reporting across the stages of the sustainability reporting cycle, focus on obtaining assurance, an essential part of an organization's continual improvement. Think about what level of assurance is appropriate to meet the needs of your users, of your organization's sustainability-related information, as well as whether your organization is subject to any regulations determining that level of assurance. So while external assurance gives confidence to users of sustainability-related information, including investors, do remember that internal audit has its own role in helping an organization improve effectiveness of its internal controls. So I guess your next question would be, how would you select an independent assurance provider? As sustainability reporting can relate to a large variety of subject matters, ensure that they have the right credentials and subject matter competence, as well as experience in the industry that the organization operates in. The assurance provider will also need to have a good understanding of the link between sustainability-related and financial information, be regulated, and abide by the ethical requirements. At the same time, those charged with governance, such as the audit committee, have their role and important remit in building stakeholders' trust. As part of their oversight of the quality of assurance services, their responsibilities would include advising on the assurability of sustainability-related information, determining the scope for internal and external assurance, as well as the level of assurance, developing and strengthening the policy to appoint sustainability assurance providers, as well as ensuring that these assurance providers have access to the appropriate staff and supporting information. But of course, in smaller or less well-resourced organizations, the focus on assurance is likely to be scaled back and more focus placed instead on continual improvement. But hold on for a bit. Before we explore further into what continual improvement entails, I'm going to step back a little into reporting. So by now you would have worked through the earlier stages of our sustainability reporting cycle, and your organization is ready to incorporate additional relevant data into your reporting package and then move on to preparing the disclosures themselves. Your reporting package might range in complexity, perhaps from a set of spreadsheets to automated system-generated reports. So to help you with this, we have developed a set of sample worksheets which you can download from the ACCA website. A few key things to note are that these are not pro forma worksheets, but rather they highlight the key items which are required for reporting based on the IFRS S1 and IFRS S2. However, using these worksheets should not bypass reading the standards themselves. So one example of how you can use our sample worksheets is by workshopping the questions and actions with your colleagues and stakeholders along your value chain. As these worksheets highlight key reporting items, working through the guided thought process will help you in developing the first cut of your organization's sustainability reporting disclosures, while helping to ensure that the various reporting needs are aligned and met in an efficient manner. Sharon, would you like to reflect something here?
Yeah, I was actually thinking about what you were saying, and I think that the worksheets are a really great tool in helping everyone get started. They are really good when designing and monitoring the process for reporting. And you touched upon, aspects of who is responsible and accountable for the different components. And when it comes to monitoring, I think what it allows is when you're using the worksheets that we've developed, at a glance, you should be able to appreciate where the gaps are in the data. You might then also, well, you certainly should be able to then work out, well, who and how that data got to you, and perhaps what's not quite working perfectly in that process. And it's from there that you'll be able to focus on, what continual improvement might look like for you as an organization. And it will be different across all organizations. I think that's probably what I'd like to say most.
Thank you, Sharon. So you've segued us nicely back into continual improvement. So organizations need to set metrics and targets. I think this is something that you highlighted earlier, to assess and monitor their own quality of reporting and how that progresses over time. So these metrics and targets are different from the ones for disclosure and are a way for the organization to validate that its reporting process and output are meeting both its internal and external stakeholders' needs. So in our guide, we have listed some metrics and targets that your organization might find helpful to consider. And these are aimed to assess progress in quality of data over time, stakeholders' feedback on value of sustainability-related information, development and retention of sustainability-related knowledge across the organization, and the availability and ease of access to sustainability-related data across the organization. So before we end today's session, I would actually like to reiterate my very first point for today, and that is to get started. Get started on connected corporate reporting, and then find ways to improve. Again, I'd like to say that professional accountants are well placed to lead organizations along their sustainability reporting journeys while keeping ethics at the front of mind. So use connected corporate reporting as your enabler along your sustainability reporting journey. Collaborate with others, drive transparency, business change, and sustainable value generation over the long term. And with that, we have come to the end of today's session. Once again, I'd like to say thank you to Sharon and also to you for watching. I leave you with 2 actions. 1, to watch the other recordings on how to implement the processes as well as on working with people and using technology as enablers. And 2, to workshop the areas we have discussed today. Questions are available at the end of this recording and can be used in organizations by other educators in their learning programs. And so thank you very much and goodbye.